What's up, cryptocurrency traders and investors? This is Hugh. And in this video, I'm going to talk about trading volume and how you can use trading volume to possibly predict turning points in the cryptocurrency markets. So, just if you're familiar with using volume with stock trading, then this is going to be old news to you, and you probably don't want to watch this video. But if you're new to trading and you don't know how to use volume to look at the charts, then this video will be very helpful. So keep in mind before we get started that these are just clues, right? As a trader, as an investor, you're just looking for clues. Nobody really knows with 100% accuracy where the market's going to go. But we're looking for these clues that can give us a pretty good probability that things are going to go a certain way, right? And that's how trading and investing works. And anybody who tells you that, this is a guarantee or whatever is lying to you. So this is just one of the clues that you can use to figure out when the markets are going to turn, when you should buy, when you should sell. And it's not perfect, obviously, but it is going to give you more information than the average person has. Okay, so let's take a look at this. First of all, let's take a look at Monero here. And we're looking at this bar graph at the bottom, and this is volume. And keep in mind that volume is only particular to a certain exchange. So in this case, this is Bitfinex's volume, and you have different volume for Poloniex and whatever, all the other exchanges, right? And in the stock market, volume is very valuable because there's only one exchange basically that its stock can be traded at, right? In the forex market, volume isn't so useful because there's a lot of off the books trading that doesn't show up on brokers volume feeds, right? And it's not too accurate in the forex world. However, in the cryptocurrency world, a lot of these currencies can only be traded on certain exchanges, so volume does become a little bit more valuable than in the traditional forex world. And if you want to double check your volume, that's always a good idea. Then look at the data feed from a couple of different exchanges. For example, you could have one for Poloniex, and then you could have one for Bitfinex, and then kind of compare them and see, okay, are they both telling you the same thing, or is one saying something and the other one saying another thing? Which in that case, then you probably don't want to listen to whatever signal you're getting, right? Because it's not a definite signal. So let's take a look at Monero here. Monero on Bitfinex, and these bars are volume, and the green bars mean that price closed higher than it opened for this bar, and the red bars are the opposite, obviously. Price closed lower than it opened. So the red and green bars make it really easy to see if it's bullish price action or it's bearish price action on this particular candle or this bar, right? So what can this tell us? Well, it can tell us, it can give us some clues as to what the market is doing. So for example, if we look at this big run up here, we can see that people were buying heavily on this bar, right? And that's when volume really took off. Like price, well, let's zoom in a little bit more so you can see here. So so on this bar here, price kind of broke out of this pattern, right? Not too convincing. This bar, nothing really happened. You had like a tiny red bar there, and then boom, you get this huge volume come in, right? Now that doesn't necessarily mean that this is going to take off. However, it does give you a clue that more buyers are coming into the market, which is a good thing if you're trying to go long, right? So if you saw this huge spike in volume, it's much bigger than anything else before that, right? If you saw that huge spike in volume, that could have been a good reason to get in. And as you can see, price started to move up, and then another wave of buyers came in here, right? So that's another signal that, okay, there's more people coming into the market. However, after that big bar, then price really started to drop off, and you didn't see any more big green bars. And this can tell you a couple of things. First of all, if a lot of people bought here, and then not a lot of people sold coming down here, then these people are still hanging on to their coins, right? And this is going to be an important price level because of that, because you're going to have a lot of people holding a buy here, and they're trying to wait it out, and they think that the coin is going to go up in the longer term. So they're waiting for it to pop 150. So this could be a key level in future price action. Now, when you see the second green bar and this big move up, that could also signal that you should maybe start to either lighten your position if you're trading, or get out entirely and wait for the market to come back down again. This is simply because in this current cryptocurrency market, you're seeing a lot of pump and dumps. It's not the traditional price action that you would see in futures or in stocks, or maybe in penny stocks, but not in futures, not in liquid stocks, not in Forex, right? This is a very pump and dump environment, and you have to remember that. So what you're looking for is basically the breakout, right? And then you're going to ride it up a little bit, and then you're going to look for a good place to get out. If you're only looking for longs, which I would recommend at this point, because margin trading can get you into trouble, right? So that's one way that you can take a look at it. That's one example. So if we move forward on this chart, you see that there's a little bit of action here. People are trying to boost the price, and that could signal that, you know, this $80 price level is a price level that's well defended. But who knows at this point, right? It's not a very clear signal, and that's what you're looking for, are clear signals. And then let's take a look at Bitcoin, because this one has a classic volume indicator here. So as you can see, well, first of all, from a fundamental standpoint, Bitcoin is the strongest cryptocurrency, right? It's the most used. It has the most practical value. People are actually using it in their apps, on their websites. They're accepting payments through Bitcoin, right? So this is going to be the strongest cryptocurrency, at least for the foreseeable future. So the bias is going to be up. So if you look at the volume here, what was a good place to get in? And this is the most ideal place, and it was a good signal because you see price dip back down, and you know that people are using Bitcoin and people are going to buy Bitcoin, right? A lot of people are trading Bitcoin. So when you see this bullish bar with a lot of volume, that's a pretty good signal to buy. So if you could have gotten in even at the close here at around 37.62, then you would have had a nice ride all the way up to, you know, where it is now, 59,600. So it can signal bottoms. Same thing here. Like you got this big bullish bar with a lot of volume. Price does this triangle formation, and then it starts to move up. Here you can see that there was this, you know, price kind of bounced off this level here, but then the volume was negative, right? Well, I mean, there's a volume spike, but the price action was negative. So that's probably not a good place to buy, because, you know, people are selling, and as you can see, right after that, price started to dip. So these are just little clues that you can use to figure out where the market's gonna, you know, bounce and where it's gonna top out. So let's look at some other examples. Let's take a look at Ethereum. Same thing here. At this bottom, you have a big spike in volume, and that signaled that the price is going to go up. And in my opinion, Ethereum is the second most likely cryptocurrency to go up, right? Because it has the second most value right after Bitcoin, in my opinion. So that could have been one signal there. And then same thing here. You have a big green bar here, price bouncing off this level here, and then price starts to move up. So, but I'm sure you probably saw that on this candle here, you know, it was green, but price started to move down. So what's up with that? Well, you can't just look at the bar just by itself. You have to look at the previous history, right? So what was happening here? There was a huge run up. So even though there was a green bar here, you know, the market basically is going to start to run out of buyers, like I was talking about, right? Pump and dump. It's going to be harder to sustain this move, because this was a pretty parabolic move. I mean, it basically went from 49 all the way up to 400, right? So like almost a 10x move, and in any market, that's not going to be sustainable. So once you see you know, a big spike in volume either way, like if you see a big negative spike in volume, that could be a signal that it's going down. Or even if you see a positive spike in volume here, this could be the dumb money getting in, right? They're chasing the trend. It's total FOMO, and that shows you that that's where the dumb money bought, and that's why the price comes back down again. And if you scroll back a little further here, this green bar signaled a breakout, or this big volume bar here, and price started to move up. So as you can see, this is not like a foolproof system. There is no such thing as a foolproof system. But if you take a look at volume, and you analyze volume, and you analyze the price action of the chart, and you analyze the fundamentals, what's coming out about the cryptocurrency, what kind of news is out there, have they launched a new product, a new feature, and when you put these things together, you start to get a bigger picture of where the cryptocurrency could possibly be going, right? Okay, let's take a look at a couple more charts just before we go. Here's one for Litecoin, and same thing here. This huge volume spike signaled a breakout from here. Price retraced back to this previous consolidation, and then it started to take off. But the opposite was true here, in that price had already run up, right? So no more buyers left, and then this green bar signaled the top, or that's the FOMO level, where people were afraid of missing out, right? So the dumb money jumped in, and that's where price started to move back down. And then as soon as you get this bearish price action, then you get this huge volume spike with this bullish bar, and we saw that before, right? In Bitcoin, same thing. Price starts to move up. So again, not a 100% predictor, but it can give you a clue, right? And same thing here. Price started to move up, or price broke out on these two big volume bars. Price moved sideways, and then price started to move up again, and that was a good area to get in. So I hope that helped. Just use your own analysis on this. Go through the charts. Go sign up for TradingView or Coinigy or whatever you use for your platform, and just look at the charts. Put up the volume and see for yourself. See what makes sense to you. Does the volume tell a story, or is it not really telling you anything? Sometimes the volume can be kind of random. It doesn't really tell you a story. But when it does tell you a story, and there is a good reason to get in, then the volume can show you, some good clues as to where you should trade or invest. Or if you want to add the volume, just as a final thing, on your TradingView charts, you just go to Add Indicators, and then you can add the volume here. All right, I hope that helped. Thanks for watching. If you like this video, please give it a thumbs up. If you want to get more cryptocurrency analysis and tutorials, then subscribe to my channel. All right, hope everything's going well. Talk to you soon.